Hey guys, welcome back to another video, and in today's video we're going to do Bitcoin analysis. We're going to look at CRO, why CRO might have a significant reversal in the short-term future, some more updates on Crypto.com, why it might have a bank run essentially because of all the FUD, and there's some concerning news as well. I'm also going to be talking about the best way, in my opinion, to manage your risk with your crypto in terms of opening positions and keeping your crypto on a hardware wallet as well. So I've got a very interesting method, so make sure you stay till the end and watch as well. So without further ado, let's quickly jump into the charts for CRO, and then we'll have a look at Bitcoin as well. So let's see. So wow, look at this. This is the daily chart for CRO, and this is when the FUD regarding FTX and the CRO FUD speculation also came up. And for the last 1, 2, 3, 4, 5, 6 days now, we've been falling like crazy. But however, look at this candle. We are having a huge exhaustion in sellers right now, and it's looking like we could be having a reversal. Also, when we look at the volume, we can see that the volume here indicates a potential reversal as well. So if this candle closes like this, most likely, according to TA, we would be reversing like crazy. So it might be a good time to actually, manage your risk and potentially open some long positions here for CRO. We can see that the MACD is reversing as well. The MACD line might turn bullish very soon. So is the stochastic. The Arun has not still headed downwards yet, but this looks very promising for CRO. Another news update for CRO is that apparently they're facing withdrawal delays in CRO. Now this is normal because of a lot of FUD. People are withdrawing their crypto in one shot. Now, of course, in any exchange, even if they have one-to-one reserves, but again, we don't know this as well. Even if they say they have one-to-one reserves of covering their assets, currently no one has published transparency records so far, to my knowledge, of their crypto holdings, other than listed on the exchanges such as Coinbase, which is the only one on the New York Stock Exchange which publishes some of its financial records. But others, we do not know exactly if they have enough reserves to cover. A business, it normally, never has enough funds, especially like an exchange, right? So does banks, right? Especially in a recession environment, in a hyperinflationary environment. You don't see businesses having more cash than their liabilities. They're going to have more liabilities than they have cash, and their plan is to be paying off their liabilities, like their loans, their debts, or their whatever, in the long term. But in sudden immediate FUD and sudden immediate speculation, when the market has a huge downturn and the market is playing against them, then they fall. They're pretty screwed then. So then everything goes against their favor, causing a bank run, which is what happened to banks in the recession, and which is what happened to FTX, and could potentially happen to Crypto.com because of the FUD they're having. But again, we don't know exactly if there's fundamentally wrong. It's because of the concerning stuff that has been going on, like the mass withdrawals and now delays as well. So that is what is concerning. Now, I want to talk about what is the best way to minimize your risk through keeping your crypto on a hardware wallet. And when you want to open positions in crypto, how to minimize your risk on an exchange. So the first one is to have if you're opening positions, right? The first one is to have assets in multiple exchanges, because you do not know what's going to happen to any of them. I mean, you didn't know before, now it's even more concerning. The second and the most important one is, let's say, I'm going to give you like an example. You have 5 Bitcoin. Okay, immediately put that onto a hardware wallet. Okay, that should not personally be on an exchange right now. This is my opinion, not financial advice, but it should be on a hardware wallet. And let's say you're trading, you're position trading, you're swing trading, you're day trading, how much ever you want to trade, then you put that onto the exchange. For example, I want to trade 20% of my portfolio, which is 1 Bitcoin. Okay, instead of putting 1 Bitcoin onto the exchange, I look at how much leverage I can use, right? According to the stop losses I want, the risk I want to put in, I calculate the leverage. Let's say 10x leverage is perfect for me. I can open a position where I have a good stop loss and I'm not going to get liquidated. So when I calculate the amount of leverage I'm willing to use, let's say 10x leverage, I want to have a one Bitcoin position, but I do not want to risk one entire Bitcoin on one exchange. So I take 0.1 Bitcoin out of my cold wallet and put it on the exchange and use 10x leverage to have a one Bitcoin position. Now, instead of using one Bitcoin to risk, you're risking 0.1 Bitcoin, but you still have a one Bitcoin position. Now, this is actually the smartest way to use leverage and to minimize your risk. And especially in environments like this, where you need to minimize your risk the most, this is the best way, in my opinion, to be using leverage, to taking advantage of leverage and risking as little as possible while having the same amount of position that you want to open. So this is the best way, in my opinion, to use leverage and minimize risk. So with that aside, now we can switch to the Bitcoin chart because it's pretty interesting. Oh, this is the Bitcoin chart. Okay, so what's interesting is if we go to the daily chart, we're actually having a lot of bullish volume on today's candle. And we can see that the MACD has began to reverse. The MACD has began to reverse. So is the MACD line, which will soon become, well, not soon, it's got a few more candles, but it's bottoming out, let's say. So is the stochastic. It's going to flip bullish very soon as well. So we might have an end here on the massive capitulation based on the FUD around FTX. Because if we have a look at the S&P is very healthy. It's on an uptrend right now. The S&P is doing very well. So should Bitcoin. But again, it's been under the influence of FTX. So it's been 6 days already since the happenings with FTX started, and I think the FUD is slowly starting to wear off, and this is causing the impacts to the markets to calm down as well. So potentially in the next few days we could be looking at a reversal, especially if we break out of this upward ascending triangle. Hold on, let me switch to the 4-hourly chart. So this is what we see on the 4-hourly chart. This is not a bullish pattern. It usually breaks to the downside, of which if it does, we could come back to 14.3K. So 16.1K is a very important resistance to watch. But if we do end up breaking to the upside, because you can see the Bollinger Bands have started to squeeze now, we could break to the upside. And if we do, then the two very important resistances to watch is 17.5K and then 18.7K. And then, of course, the psychological support of 20K, which is also the top of this weekly descending wedge, which is actually a bullish. So if we keep in this, if we keep here and we retest up to this support, this resistance, and we break out, then it's pretty bullish. But again, when we look at macroeconomic situations, it is not good. Also for stable coin wise, stable coins, I'm trying to do as much research as I can. Honestly, there's FUD about USDT. Of course, it's very hard for USDT to collapse, but no one could have expected FTX to collapse, right? So when you look at your alternatives, I believe cash is king right now. You could always convert your cash into stable coins whenever you feel like doing so. But I believe that gold is very good right now. It could have a short-term reversal, or instead form this cup and handle pattern, which would cause it to go significantly higher. I think gold is very bullish, especially if interest rates go to the 6%, which is predicted. So is silver. So I think silver and gold are two assets to be hodling right now instead of crypto assets. This is what I'm personally doing. So not financial advice. So this is the market right now. If we have a look at the crypto bubbles index real quick, Trust Wallet is pumping like crazy because CZ has been tweeting about it, saying, okay, Binance is a both centralized exchange and a decentralized exchange. If you use Trust Wallet, blah, 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 etc. Very good marketing on Binance's side. So props to them. They've taken advantage very, very very good. They've done an amazing job. So props to them. So trust wallets have been the only thing that it looks like is gone up other than this XAUT, whatever that is. FTX is down 94%. I mean, it's just dead at this moment. It's got a market cap of $426 million, pretty much dead. Aptos has been suffering. Wow, okay, it's come down to $4. So that is the fundamental update for Bitcoin, for Crypto.com, how to use leverage in a very wise manner to store your crypto. Again, I started this journey in crypto with you guys. I really appreciate you guys for watching, for supporting. I hope to grow with you. I hope to improve my knowledge with you and deliver the best content that I can. So thank you so much for everyone that's been supporting me. I promise you to bring the best content that I can in the days to come. So thank you so much for watching. As always, if you do like this video, please do leave a like and subscribe. It really helps me out. Thank you so much, and hope to see you guys in the next video. Bye bye.